Right, all right, guys. Well, tonight is the big one. I'm afraid this is it. I don't really know how to put this in any other terms, but it's either if they do, if they don't tonight. It's a bit of an all or nothing session, I would say. Even if they don't raise rates, that's going to be a massive shift in the markets. That's for sure. Um, I think only 29% of the analysts, which I am one, quoted for rate rises today. Look at the euro dollar and some other markets. It doesn't look likely. The dollar's taking a bit of a spanking and the euros are rising. But I don't know. I mean, I do not know. That is the God's honest truth. Just as everybody else, Janet Yellen, is the only person that knows what's going to happen right now. And I would be very, very well, I won't be surprised by any outcome, to be honest. So right now, we're not interested if the Fed rate rises or not. We're interested in making money, and I would say that we've got to be very, very careful tonight, guys. I mean, I've seen these these kind of FOMC meetings move more than non-farm payroll. So what we need to understand is where we can make money and where we can't. There's actually quite a small range, I would say, today in the euro dollar, and quite a small range in gold and the things that I look at to try and interpret what the Fed might do tonight. I would say, really, it's almost like the flip of a coin, to be honest, almost like the flip of a coin. I would say that in my heart of hearts, I don't think the Fed will raise rates today. I think they're definitely going to do it, as we all know. I mean, I'm not bringing anything new to the table there. But I think what they'll do is be a bit more clever. I think they'll try and raise rates closer to Christmas and, again, use that kind of Christmas festive period to bring people into the new year. So I think as a cynical person, which I'm very cynical, I think the Fed will do this a little bit later in the year. So I don't think it'll be a raise today necessarily, but certainly it will be this year, okay? So remember the risk warning. Before you trade, remember that spread betting and safely trading can harm your capital. Resulting in losses that exceed your initial deposit. They may be so for everyone, so please ensure you fully understand the risks involved. The information and comments provided here under no circumstances are a consideration or offer to invest. Nothing herein should be considered investment advice. The information provided is believed to be accurate. The data is produced. And again, education only. The content of this webinar is posted by moderator and Internet.com. The content is not constitute financial or investment advice. Internet.com does not accept any liability for the comments or comments during the session. So we're going to go over some live action analysis, multiple time frame trading, and really we're here for the fundamental news. All about this Fed hike or not hike. I mean, to be honest, this is probably the most important piece of information we've had, I guess, in the last decade, because if it's not a hike today, it will certainly be a hike in October or November, like I've said. And then if it isn't today, it is coming. If it is today, then hold on to your hats, guys. This is going to be like a move you've never seen in history. I think the euro dollar will spike about probably 2 or 3 points down. I think the dollar yen will probably spike. I don't know, probably 150 pips. Very, very, very quickly. And a gold is going to be an interesting one to watch as well. So I guess today is it's one of these. I mean, it's not the day for the big trades, that's for sure. I mean, I was trading gold yesterday. I had about 550 lots on gold into that upward movement and made a bit of money. But I would say today is not a day for taking the big trades. I would say keep your trades small, understand your risk, because this could literally these markets could move a couple of points in a second. So be very, very careful when trading today. So I guess looking at the markets, I mean, I don't know really. I mean, I think we're kind of undecided. The euro dollar, as you can see in the top right, is towards the top of the range, but we're not at any major levels, to be honest. Obviously, we've bought up over the last hour or so, but there's nothing there to tell me that people are piling into the euro dollar, as in there'd be no rate hike. And then obviously there's a little bit of dollar yen weakness in the bottom right, but cables remained strong over the last few days. We saw that kind of sell off. 2 or 3 days back, and we've done nothing but bought back. But I would say that really we've got a couple of instances today. I would say that if there's no hike today, everybody's expecting, the indices, as in, the S&P, the DAX, the FTSE, the SMI to rise. So naturally, that should mean gold should sell off. I don't really see that correlation right now, to be honest. I don't see that same correlation in the indices going up and gold going down. So what I would say, if there's no rate hike today, it's probably safer to be in the indices towards the lower of the range than anything else. The currencies, to be honest, not entirely sure. Again, I don't sit on the fence, because I know I'm not that kind of trader. I'm not taking really an opinion into this trade today. But I feel that the strength in the euro, strength in the cable, the weakness in the dollar is probably just people getting out of positions. I don't really think that's any kind of real precursor to what's going to happen today. So really, for me, it's a pretty tough day, tough day for trading. But if I find it tough, yeah, then, listen, guys, that means there's money to be made. If I don't know what's going on, then I don't have to be big-headed here. Nobody knows what's going on. Janet Yellen, Mark Carney, Mario Draghi, all these guys, are literally on a knife edge. We all know, everybody in the world knows rates have to go up, but it's when. And I guess it's not even that today is that much of a huge event, because it's what's going to happen in the future. Once you raise rates, you are stuck. You're not going to be able to take them down. You have to keep raising rates for maybe 5, 10, 15 years. That's why everybody in the entire world, every man and his dog, is listening to what's going to happen in 8 minutes' time. Because, I tell you what, I don't know. Janet Yellen obviously knows, but the rest of the world is sat here waiting to think. Because once rates go up, they're not coming down. I'm talking they're not going to come down for a generation. Normalization, as we know it, is going to take, I don't know, anywhere between 5 and 15 years. To get to 5, 6, 7% interest rates, where they really should be. A lot of you guys remember interest rates, back at 18, 17%, back in the 80s. So all these things are normal. They all come in cycles. So today is a message, not just to the US, but to the world. Now, the dollar is really looking a little bit buoyant, but it's the euro for me. And I don't know why the euro would buy up, even if the Fed don't raise rates today. The euro is still, for me, finished. So I think we're going to see a short squeeze in the euro, maybe up to 1.735. Maybe to these higher levels at 1.14348. It really is. I mean, even as seasoned as I am, I don't really know what to tell you guys for the best. All I'm saying is you need to clip fairly small size if you're trading this, and if you're in anything and you're on side, you've got to hold it for at least 15 minutes. So that is, 3 5-minute candles. Otherwise, you're going to get whipsawed around. You're not going to get the full benefit. If the Fed do raise rates today, I mean, it's literally monumental. This is, again, I've been doing webinars and presentations for the last 5 years. I've done over 1,000 webinars. And I've been telling everybody that, rates are going to go up. And we're waiting, not for non-farm payrolls anymore. We're waiting for the Fed announcement, which is today. This is today. All the things I've talked about are all, pivoting or all pivotal around this moment today. Again, look at the euro. It's really, trying to get to these upper levels here. This 1.13719. And it's all leading to this. It doesn't matter if. It's not if anymore, it's when. And I would say 99.9% it's going to be this year. I mean, I don't see any circumstances where the Fed can't raise rates. But if they don't do it today, this is an opportunity for the big institutions, the big players, to really, ruffle the feathers of the retail traders in the markets. I mean, look at these spikes in the euro dollar. I mean, we've seen movements over the last 30 minutes, 45 minutes that you don't see. Okay, you just don't see these spikes in normal circumstances. We've got 6 minutes before the Fed tell us if they do or don't move rates. For me, to be honest, like I said, I mean, it's for all my knowledge, for all the years I've traded, I don't really know. This is uncharted territory for me. All I know is I'm going to be cautious. Okay, I traded a lot of size yesterday, and it was very, very kind of very stressful. I didn't really understand why gold was so bullish, and obviously it came down. But what I'm thinking today is an opportunity for the institutional style traders on the low volumes to absolutely manipulate the markets in like no way we've ever seen. So if you're holding a position, good luck to you. Okay? If you're going to try and trade this, again, good luck to you. I would say if you're going to hold any position, I would try and take it for the maximum profit over 15 minutes. If you're a short-term trader, give yourself one 5-minute candle. Now, the basic rule of thumb here, I would say, is that if there's no Fed hike rate today, then we're going to see a movement up in the indices. That is what the movement, it's free money. That's what basically, if there's no Fed rate hike, then that's going to be the S&P again closing over 2,000. It's going to be all the indices following suit. I don't necessarily think that will translate into gold and gold will sell off. What we're looking for is a dollar. If there's no Fed rate hike today, maybe potentially that could be a dollar sell-off, which means gold becomes cheaper and we see a spike up in gold. It's really contradicting everything we hear, from the next 4 minutes onwards is going to be a very difficult thing to understand. Now, I would say personally, my eye is going to be in the euro dollar and probably, I think, the S&P. I don't really trade the S&P too much because there's just not enough money in it for me. I can't really, trade enough size to make it interesting. So I'd say probably I'm going to keep an eye on the euro dollar and gold. Now, gold, as I said, is a very tricky one because no interest rate hike means that the dollar comes down against the Japanese yen, means gold goes up in value. That's what the traditional values are. Doesn't mean that's going to happen. So I'd say definitely what I'm going to do is keep the charts, on this hourly view and just see if we see any spikes. I'm going to try and trade it as technically as I can and just try and nick some money. I'm not trying to make any big money today, that's for sure. I'm keeping it very small, only 15 lot clips, which obviously probably seems a lot to you guys, but I've got a large account. So I think for me, see the euro, big spike up and coming down. I mean, it's almost impossible. It's almost impossible for me to give you guys anything you don't know. It's almost impossible for me to say anything that you've not thought about yourselves. All I'm saying to you is you have to be ready. You have to be ready for any outcome. Be ready for if it's a rate hike, which you've not heard in 7 years, or rate hike, and then we just literally get involved with the markets, buy as many dollars as you can, sell as many indices as you can, or it's just basically no hike at all, back to status quo, listen for the comments, and then get involved probably mainly in the currencies or indices. So it's not an opportunity today to make vast sums of money. What it is a real opportunity to lose vast sums of money. So again, take my lead, listen to the comments, and see what we can do. So, I mean, I'm not going to make any apologies today, guys. I'm going to talk very quick. I'm going to say a lot of things, a lot of levels. I have no idea what's going to happen today. And if I don't know, then trust me, the rest of the world doesn't know. There's a reason why I've been doing webinars, for the last 5 years. There's a reason why, I'm a hedge fund manager. Because, I put my money where my mouth is. So today, we're going to trade some stuff if we can see anything. And, keep your eyes on the top right, bottom right, both the euro dollar and the dollar yen. These are going to be winging around quick. That's for sure, guys. So what we're expecting is no change, and no change is a buy for the indices. So no change, buy the indices, watch for gold. No matter what happens today, guys, it's going to be volatile. That's for sure. It's going to be very volatile. All right, guys, just under a minute now. So get ready, understand what you're going to trade, try and understand, what you're going to get involved in. I'm not hearing my squawk, so that's not ideal. Right, guys, 10 seconds. Get ready. Get ready. What's the euro? Unchanged. So the euro spiking. Watch the euro. Watch these big levels up here. Watch gold. So unchanged. Gold spiking. God, look at that spike in gold. Watch that gold spike. So improvement in labour market. Watch the DAX. Okay, watch gold. Sell some gold. Gold's too high. So no rate hike in 2015. No rate hike in 2015. That's the call. No rate hike in 2015. Okay, coming down. Look at the spike in the DAX coming down, coming down, coming down. Right, taking the profit in gold, taking the profit in gold. Yeah, gold was far too high there. But indices have come down. S&P has come down exactly from the high. So has the DAX. Okay, great level up there at 126. You can see highlighted. Okay, gold now has gone from the spike down. Okay, so it looks like no rate hike in 2015. That's the message. That's the message. So watch. No real movement. No real movement. You know, after all that. Okay, all that spike in the euro dollar. So I guess all these things, these comments are coming through, are saying look at that again, that movement in gold, just absolutely uncalled for. Look, DAX is really coming down now. Watch the DAX, S&P, DAX, SMI, FTSE, all taking a hit. Gold spiking back up to the highs. We've already taken our profit, so it doesn't matter. We're out of that. Wow, look at that movement. That movement in the DAX, all the way to the highs, to the lows, back to 10267. All the market now is deciding what that means. I've interpreted from this, there's no hike. There's no hike in 2015. No hike. Okay? That means the dollar must get killed. The dollar must get killed here. Again, all coming back to inflation, and all the things that we think, we understand by keeping rates low. So gold's back towards the highs. Watch this level at 1127.6, all the way to this, monthly level up here. Okay, at 1131.5. So all the things I understand from what's being said, no hike this year, no hike this year. That is. That is not what I expected, guys. Not what I expected. So watch the euro spike, 1142. Okay, that's the target. So gold again, it's on the march up. So from all the things I understand from what's been said, all the comments, no hike this year. No hike this year is massive. Absolutely massive. So watch gold there for these big levels up here. 1127.6. Watch it test that. So again, a complete 360 in the DAX. SMI bouncing around the 8851 level. FTSE doing absolutely nothing. Cable's taking a bit off this. Euro dollar's getting dollar yen is getting spanked now. The dollar was always going to get spanked off the back of that. No hike on the cards this year. The dollar was always going to get spanked. Look for this big level down here at 120 spot 107. So gold coming back away. Remember, as gold comes down. As the dollar comes down, you expect to buy gold, but gold's really, it's certainly spiked, and it's certainly towards the tops, but I'd say in the long term, we're back to the 50% of the daily. So again, the hiking probability in October is down, okay? So all the analysts, again, down. Everybody's saying no hike in interest rates. Certainly, obviously, we haven't seen one today, but not in October. So again, this puts extra fuel. Watch gold again. Watch gold again for these big levels up here. Again, I keep telling you the big levels. 50% here of a daily retracement. This is a big level up here. Oh, look at the DAX. Look at the DAX. You're not surprised? Look at the DAX. Look at the DAX. Look at the DAX. Buying some DAX. Buying some DAX. Buying some DAX. Out. What happened there? What happened there? How much did I make? Jesus Christ. Look at the DAX. Look at the DAX heading to these daily levels. So the DAX, SMI, all the stock market is now taking a hit. So think about that. What does that mean then? If it's not a rate hike now, it must be a rate hike in future. I mean, that was absolutely crazy. I mean, I couldn't get out of the trade there and still made money. That low level of the DAX on that spike. This is what I'm saying. These interest rate announcements, are much more important than the non-farm payrolls, anything else. I mean, God, the liquidity is terrible, absolutely terrible. Look at the euro again. If the euro gets these levels up here, guys, sell as much as you want. 1.4352. Look for these big levels to be hit. Okay, obviously indices have taken a hit, big hit. I don't really see why. I think. Maybe in the kind of mind's eye is that Janet Yellen's backed herself into a corner. So there's no red hike this time, but then it's absolutely cast iron, 100% guaranteed that the rate hike is going to happen this year. So look at this move. Look at the movement in the S&P. I mean, this is difficult. So they've lowered the Fed rate funds from 3.5 to from 3.8%. So that could be again something that's rippling through the money markets. I mean, that was a bounce in the DAX. I mean, God Almighty, that was a. If you just gone a little bit further, it would have been a very, very, very kind of heavy average trade. I mean, we've made about 500 quid in the last kind of 2 minutes or so. So we're not after to chase it, but look at that. Look at the markets that come back now. I mean, the volatility is difficult. It's difficult. I mean, people really struggle with the volatility, but at the end of the day, volatility makes money, so it's understanding. Look at that gold. Gold's had that 5-minute spike, and is now trading back easily towards the 50%. Yes, I mean, listen, guys, I mean, I'm not going to lie to you. This is the most difficult trading anybody can ever do. But as I've said, I've made, I'm not going to lie to you. Look at my account. Yeah, we've made, I don't know, 4,500 quid, whatever. This is my trades here, 2,700 quid, blah, 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 blah. So I'm not trading small amounts of money. I'm trading proper money. But then the day, this is, for me, bonus money. It's what's going to happen tomorrow is the real ripple through for this. That DAX spike down, oh, God. I mean, if it just come a little bit further, that was a max account. If it just come down another 28 ticks, that's a great level to buy. So I think the whole world now is expecting a rate hike, and we're seeing that spike up in gold. Gold's coming down. The spike down in the indices now going up. And really, Janet Yellen has really backed herself into a corner. We're all data dependent, so it doesn't matter if or what the data is. She has to really raise rates. So I think that's what's filtering through to the markets now. This is the institutions getting ready for tomorrow. So the institutions are saying, bang, we'll smash the DAX down, we'll smash the SMI, the FTSE and the S&P. Then tomorrow we're going to open probably 2 points higher, because no rate hike means that we've got more free money for the next at least month to smash into the markets, and then it's going to come down. So this really is, it's heroin for the markets. Okay, if the markets can't go down on bad news, which this is not good or bad news, it's very difficult to say, because no Fed rate hike is good news in the terms of traditional speaking, but then it's really bad news because the markets can't sustain themselves. That's what the Fed is saying. They're too worried about putting rates up. So really, I think we're going to see the markets definitely open up higher tomorrow. So I mean, look at these lows. These lows are institutions smashing people, out of long trades. No rate hike, everyone's going to buy the markets. So we smash them out, we get up. As I said, we bought the low in the DAX. Didn't really make that much money, to be honest. Only 117 quid. But it's still money, I guess. It's whatever. But the market's now trading back, to these good fib levels. So 80% probability of a Fed rate hike in January of next year. That's what's coming through the squawk now. So we're not looking for a Fed rate hike this year. I cannot believe that. I literally cannot believe the Fed will not raise rates this year. I cannot. Yeah, exactly. The rest of it, again, this is so contradictory. Hearing on the squawk, everybody else thinks that Fed rate is definitely going to go up this year, and I'm with that. So, I mean, buy these lows in the dollar. The dollar, you cannot get away from the dollar. China, Japan, the European Union, all struggling. So the dollar has to be a great bet low down. Has to be. So, again, as the dollar, sells off, gold should go up. But really look for this sell-off in gold. I mean, gold's retraced again back to these highs. There's some serious players in gold, but that dollar for me has got to ping back up. It's got to get back to 121, yeah, because the Fed are going to definitely raise rates. So watch gold again. Watch gold again. As I've said to you, watch that level, a 1127 spot 2. Let's try and sell some gold up there. Like I said, guys, very, very difficult trading conditions. I'm not going to lie to you, but we're outside the range on the hourly, outside the range on the 15-minute, outside the range on the 5-minute in gold. I like to look at gold because it's a true measure of where real traders are. So again, look for these high levels at 1131 spot 4. Look for this level here at 1127 spot 2. Again, as the dollar should go up, gold should come down. So I'm going to be heavily selling gold at these highs. Look at the 50% of this daily. Look at that. High to the low, 50%. 80% of the time, it retraces that 50%. I've told you this time and time again. I mean, the S&P's pretty much retraced. I think once it goes green, it's going to absolutely spike. And remember, maybe it's carrying on until tomorrow. I mean, realistically, the S&P should probably go up another point overnight because unchanged means free money for at least another month. And, people have not cashed out just at the top yet. We're going to hold above 2,000. Watch for hourly candles to go green. This is where it's interesting. Watch this hourly candle to go green. But the DAX was a good one. We should have made money in the DAX. But again, when the money's there, the money's there. We take it. I'm not here to make, thousands of pounds live. I think, £450 is not bad for, for an evening's work. So again, watch gold. I think it's going to spike high now. So watch gold. Gold's going to be interesting. This 50% is a big level, a big level. I don't really understand that gold can maintain much higher. Even though they said there's no rate hike, it's inevitable. So I can't see why the dollar will continue to sell off overnight. Even might go down, for sure. But at the end of the day, the rate hike is inevitable. Even though we've said, what do most analysts know? They're saying, a Fed rate hike in January. It's only round the corner. It's only round the corner. The majority of central banks, and Fed officials say that rates are going to raise before the end of the year. Okay, so it's only slipped to 13, but the amount of people that think that Fed rates are going to raise. I mean, watch for gold up here. There's 50. Oh wow, look at that spike in gold. I mean, again, watch this big level here. We'll be selling as much as we can at 1131 spot 5. I mean, I guess all the things that we've heard. I mean, that everybody thinks that rates are going to raise before the end of the year, and if not, definitely January, 80% for January. So that means that it doesn't matter what happens, rates are going up. So I'm quite surprised at the gold movement, to be honest. I guess, with the actual announcement today that that obviously sterling and the euro are rising, the dollar's taking a bit of a punt down against the Japanese yen. But you've seen the DAX. So the DAX isn't holding on to its lows. The S&P is now going green. Watch gold. Watch gold again. I'm going to sell some gold up here. If gold spikes up, watch gold spikes that level, that monthly level. Come on. Just a nice spike up. We're having some gold. Just needs to be a little bit quicker. There we go. Selling some gold. Selling some gold. Should have got more size off. There we're out already for gold. Just a quick little cheeky scalp. Again, not lying to you. There we are, 180 quid. So we made the best part of 600 quid. Just a little bit of scalp. Know your levels, know where to get in, know where to get out. It's not about getting the direction of the market right. It's about getting the right kind of trade at the right kind of time. So been an interesting session. So yeah, it's going to come down, I think, now gold, but. I think for me, the whole thing is, the whole entire world doesn't know what's going on. Janet Yellen, Mark Carney, Mario Draghi, these guys are literally, they're playing, fast and loose, by the seat of the pants. It's really difficult to know what this decision means today. It means that, okay, we're not raising rates, but they're going to happen. They're going to happen soon. I mean, look for this level down here in the dollar Japanese yen. This is another big level. We'll get down here to 120, 107. That's a buy for me in the dollar yen. It doesn't change anything, I don't think. It doesn't change anything in the longer term. What it means is that This is another stalling tactic from Janet Yellen and the Fed. What it means is these guys haven't got a clue, which is worrying. And that's why we might see continued sell-off overnight to the lows. But then I think overnight we're going to see a buy, because at the end of the day, if there's no Fed rate hike on the cards this year, that means free money until Christmas. So every, Tom, Dick and Harry who's got, a pension pot or, 50 grand in the bank is going to buy stocks because they're basically a free bet for the rest of the year. But is that really wise? I don't think so. So for me, massively conflicted data, massively conflicted ideas today. It's about as hard a trading conditions as we're going to have. So that big spike in gold is coming back down. We've made our money. We've made a nice bit of money in gold today. Made some nice money in the DAX. Again, not life-changing amounts of money, but it's still more than most people earn in a week. So watch for these low levels in the dollar yen. The dollar yen. The dollar's a buy for me. The dollar's still a buy. Don't matter what's happening in gold. Don't matter what happens in the indices. I mean, the S&P really tried to go green in the hourly candle. So it'll be very interesting to see how that closes in 45 minutes. It's coming back down now. FTSE, again, back to parity at that 6187 level. So very, very interesting. Very interesting. I mean, again, these things are so fast-moving, so fluid, it's almost impossible to trade. But I've shown you that you can trade off a spread betting platform. You can trade, off the information. And it doesn't matter if you're right or wrong. There was no Fed rate hike today. But what there wasn't was any real forward guidance, apart from the probability is that the Fed rate hike won't be until January. But the majority of people in the know, which are who? Who cares about people in the know? Reckon that it's going to still be this year. So for me, I'm still going with a November rate hike. Okay, it's still going to be this year. So watch out for the ramifications of that. I still think the indices are going to close up overnight. Gold, I think we'll retrace all them gains. But again, as I've said, we haven't really had to worry too much. We've made our money today off very short-term scalps. Could have made a lot more money, but again, as I said, it's not about being right. It's about being right at the right time and making money. Okay, I banked money today. Again, one of the only traders on FX Street or in the world that trades live accounts, trades real money. I'm showing you in real time what I'm doing. Okay, so the fact of the matter is, you've seen my P&L. You've seen I'm up. Yeah, 180, 117, 330. You've seen the thousands of pounds I've made, the last few days. I don't really care. I'm not here to tell you I'm a better trader. I'm telling you, by listening to my webinars, listening to what we do, is you can make money. So I think the indices definitely close higher tonight on no rate hike. I think gold gets slammed back down, and that dollar, I really think, probably doesn't spike, but at least comes back to that 120 level. Because, the Fed don't rate this time. They're going to raise rates certainly this year. I cannot, under any circumstances whatsoever, believe the Fed will wait till January. I cannot see under what situation the world would have to be in for the Fed to wait till January. I think they're going to do a sucker punch, wait until the end of the year, let people do it over, do it for New Year's Eve, and Thanksgiving, all them kind of times. Let people get used to it next year. But Fed rates, for me, go up. And definitely, without a shadow of a doubt, the first 2 quarters of the year, and the Bank of England will follow suit. And I've told you that cable will get back to a 1.64. That's absolutely a key level for me. 1.64. Buy as many pounds as you want. Okay, it's a no-brainer. It's an absolutely no-brainer. Buy as many pounds as you want. All right, guys. Well, there we go. I mean, that was not a wild session by any stretch of the imagination. We've certainly seen some movement. And again, I mean, somebody said I'd expect more volatility. Well, that's why you've got to be patient. You've got to wait for these things to come through. At the end of the day, we've seen a complete 360 in the DAX. Okay, complete 360 in the S&P, SMI, and FTSE. FTSE's gone positive now. We've made money in 2 different markets. And I would say that if the dollar gets down to any significant low levels, just keep buying it. I mean, again. It's the dollar's going nowhere. We've seen how weak the euro is. We've seen how weak the yuan and renminbi is. And all these other kind of emerging currency markets. So we've got 10 minutes till the press conference, which could be interesting. Anything could be a spanner in the works, I guess. For the press conference. But for me, realistically, No news is good news. It still means a rate hike this year. So again, I would remain buying the lows in the stocks, buying low in the dollar, and selling any highs in gold. I wouldn't say the euro is necessarily a sell, but wait for it to get high. I mean, to be honest, I mean, there's no way on earth anybody can interpret this data anything else than what we've seen. Okay, there's no Fed hike, so we say, until January. I cannot believe that. And under no circumstances can I believe a world we live in that could happen. So I think undoubtedly there's a rate hike this year, and maybe this is a good excuse for the institutions just to sell the dollar because we know that it's inevitable. We know it's inevitable that rate hikes are going to come. So we sell the dollar at the top, yeah, buy it at the low, and then sell it, buy it back up. I would be amazed if the dollar doesn't remain back at 120 overnight. And again, with the indices. All right, guys. Well, like I said, I mean, that is another live trading session with somebody who puts the money where the mouth is. I talk a lot, I say a lot of things, but I only know what I hear, I only understand what the markets tell us. So at the end of the day, these things are very, very volatile and very, very difficult. And as I said, there's money. There's money everywhere. Absolutely money everywhere. $4 trillion is traded in the FX markets. So there's absolutely bank money to take hold of. We've only taken, £600-700 today, whatever it's turned out to be. Doesn't really make any difference. It's still money. That's what we do as traders. We seek out opportunities, we make money, okay, and then we get out. All right, guys, we've listened to this FOMC minutes and the statement afterwards. I'm not going to stay online for that and stay live for that. I think that's my time's been done, my money's been made. I would say that really for me, indices have to go higher. Indices have to go higher. Dollar has to bounce back a little bit because really, essentially, we're saying no rate hike now. Not saying no rate hike until January. As was said, we're saying there's a rate hike inevitable. So, for me, dollar has to get bought from the lows. All right, guys. Well, listen, a pleasure as always. Thanks to you guys for attending. I hope you enjoyed it, and I will speak to you all very soon. All right, guys, take it easy.